Are you ready for the next stock market crash? Are you ready for the next stock market crash? So let's get going. Let's review the anatomy of a stock market crash. We are live here. It is July 30th. The market is crashing a little bit. And are we going for a market crash? So first and foremost, let's go to the chart. If you look at the market since January, we had a higher low, lower high. And we are looking to see if this thing is going to crash. We are rejecting the day trading zones, red dashes on the top here. And is that a market crash? So I came this morning and I said here, first and foremost, we are coming, right? And retesting here this morning, the bottom of this triangle. You see that lower high? We are coming to retest this triangle. And this triangle retest is 27.94. Right, to this 27.70 area. So this is going to be key, because if we start double topping this previous high for a stock market crash, look, it recross the triangle, go, it would pass the middle part here, which would be very, very bad at 26.75, and go to the bottom of the triangle and crash. And that would be a terrible move for the market. So now that the earnings, most of the earnings are passed, and we are looking, okay, is there something bad coming? You know, it's the end of July. You know, we're going to October. So usually July, October, it's a weak period for the market. So I want to go over key important factor to look at market crashes. But I wanted to give you first and foremost an idea on the charts. You know, the technical situation, because here, if we have a market that does not come back fairly soon above the 28.30, right there, the DTZ red here, we are stuck between 28.30 and the top of this triangle there, retesting the support of this triangle, as I mentioned, 27.70, 27.94 area. And if that cracks, look at this, all the way to 26.75, we pass that middle part, 26.75 here, and that would really be bad and break this triangle at about the 2600. So, look, this is the big fundamental plan for a stock market crash, whether it's a stock market crash starting now at the end of July, you know, coming into next year. Those are the key area right now that you are looking at. So a couple of things I want to talk about the market crash and cycle and economical cycle. Okay? And by the way, again, if those videos are helpful, do not forget, we trade real money. I'm making here $13,600 here on today's move. Look on the ES, I still have some put options. 28.70 deep in the money that I bought 40 on Friday. See, so this is where it is to where it's going. You know, I bought those on Friday, 7/27. You can see the date, right? And those are up over. They went from 40 to 67. So this is how you play market crash. When you have increase of implied volatility, there's an explosion of your put premiums. You see the 28.25 put here, same, they went from 22 to 30 today. I also shorted, as I've done videos after videos explaining why I didn't like Netflix, and I'll do another one after the earnings on how I play the earnings. Look, we are making good money shorting the Netflix at 360. It's 336. So are we starting at least a market crash, or at least on the tech? Are the tech, look at Facebook. Okay, are we starting to crash, or are we testing this 27.94, 27.70 and rebound back up but we will only gain strength if we can regain this 2830 to avoid a stock market crash. So I want to talk about the anatomy of stock market crashes. So market crashes goes in cycle, everybody. And here's the big problem, and this is why I'm looking at the market super carefully now from July 2018 to June 2019, okay? Number one, here's where we have been for the past 10 years. Optimism, excitement, thrill, you know? And we started from the despair, remember 2008, 2009, those are the economical cycle. And we are right there, euphoria. And that euphoria, that euphoric phase usually can take a year or two, right? You need to look at the 10-year treasury, the 2-year treasury for inverted yield curve. I will talk about that. The VIX, the fear factor, you know, VIX, fear factor in the market or complacency. So usually in euphoric markets, there's a lot of euphoria. There's a lot of complacency, right? Like we had right now. And the key that I've showed you in our charts is, let's go back to the charts. And I think you see it better like that now, is do we make a new high here at the 2,880 on the SPX, or do we make a lower high in the market to that would trigger a crash here? If it double top this high that I told you, the 2,770 or 65 area, and it crash here and it breaks the 2,750, look, it goes back into the triangle. We'll test the middle part of the double top, which would be the 2675 as I mentioned. Go back to the bottom, and guess what? If it, I mean, this is not good here. You know, if we cannot hold right there, this 2750, 2775, the market start having a double top in place. And if it breaks and confirms at 2675 and break, that is straight up to break again the 2575. So this stock market crash here could happen anytime. You know, it's the second biggest bull run of all time. And you got to be careful, because if you have 401k, you know, and you are one of those that have doubled your money, and when you are one of those millionaire 401k, you got to be careful that a retracement, a bear market, a stock market crash here can take 50% of your asset back from you. You know, you see, this is where we are. You got to be careful of that lower high, that bear trap, you know. You got to be careful, and this is where I'm looking that at one point that lower high will be fatal in the market. You know, it has been happening again and again and again and again. You have also a problem here is that the housing market, this is summertime, and the inventory and everything, like in a lot of markets I have been looking, are not moving. It's like almost also if the housing market is starting to top as well. We all got tons of home appreciation. The economy is doing very well. We got to be careful here. At the very least, understand that you might want to do some asset allocation. Look here. Look at the previous stock market crash, bubble, or bear market in the past 20 years. Look, we went here from about 500, 1500, look the retracement. We were at 750. That was a 50% retracement in the 2001 internet bubble. Second bubble, boom, 2008, 2009, same, 50% retracement. So now look at the huge questions. We are back from here, and look at the distance. We are close to the 3,000. How big will be the consequences of this market crash? How bad will it be? You know, would it be a 50% retracement from the top, a 70% retracement from the top? Which, by the way, we've seen in previous market crash and previous market retracement. So you got to be respectful that this might happen again, that this is very, very, very real, everybody. This is why you've seen me already shorting the Netflix, shorting the market since last week, you know, because the biggest earning weeks has been behind us. So can we have another hurrah in the stock market and complacency and euphoria? It might happen. But we, the astute trader, the astute intelligent investor, the wealth creator, the people who think wealth differently, who are contrarian, you need to prepare for what's coming. You know, you need to do some asset allocation shift. You need to see at your cash positions, because when there's a bear market, right, not only can you make money and buying great stock at great prices, but you can also take advantage of the drop here, as I've done today. As you've seen, I was making over $12,000, right? So you can make money also when the market goes down, but you need to understand the right way and the wrong way to do that, and be prepared, as I have done it for the past 23 years, right? So asset allocation will be key, because if there's real estate opportunities or stock market opportunities and you don't have cash to take advantage of it, that'll be key. You know, right now is a time. Is this a time to really increase your lines of credit? It's a time of increasing your credit card limits. You know, you want to have access to as much cash as possible. You know, start selling some stocks, you know, and keep some runners. Let's say you had a stock that went from 100 to 200, like I had my fiance that had a double in their portfolio. Okay, so she got out of 80% to 90% of all her positions. She has 10% of the position going. If it keeps on going up, she makes money. But if she keeps going down, she protects her double for the past 10 years. So those are moves, you know, that you want to think before the next market, bear market, because we don't know when it's going to happen. And this is why I'm taking also some, if you look at some of the themes that I'm doing here after I made $12,000 today, I'm short also the bonds. See, I'm buying puts on the bond futures because bonds go down, rates goes up. That has been working very well for me, you know, the entire year, and our Think Wealth Differently community and Day Trading Zones community, right? So short the bonds. Perhaps at one point the gold here between 107, 113 might come back. The cryptos might come back. The bond short and the yield up might come back. So those are themes as we are trying to figure where the top is going to be. Because you know what? Pinpointing an exact top is super difficult. It's super difficult because the tops can start here, can finish here, go sideways, and then finally crack. And then this might take 1 year. So all I know is that from here now, the end of July 2018 to sometimes in June 19, we will have a market crash. Also, don't forget that the uneven years are very powerful for market crashes. 1987, 1929, those are all uneven years. 2001, 2007 really started the crap, right? So now it's over 10 years, right? So when will be the next one? So I'm keeping an eye 2018, 2019, and trade by themes, you know, until we have a perfect top, you know. And frankly, you don't need a perfect top. Remember, you need the cross recross, the lower high, and somewhat start preparing and timing this lower high here coming into the market. And as I've showed you in the chart, is it now the lower high? I don't know. All I do is I trade what I see. I trade support, resistance, and trend processes, you know, in options and stocks, you know. That has been helping me for the past 23 years to prepare for what's coming and profit from it. You know, it's not just protecting yourself and wait and wait and wait for a bottom. It's profit also from a decline here, because after 10 years of a bull market, probability of a stock market crash on the downside are very real. So hopefully this was helpful. As always, please support those videos with a like, comment, let us know what you think about this bull market. Do you think it will end? When would you think that we start a market crash? What are you doing to prepare for a market crash? And also, if you want to know more, in the description below, you can take our webinar and our 14 days trading challenge. It's absolutely free. For 14 days, we're sending you videos to teach you how to learn and trade like this. Okay? You take care, everybody. Stay safe, and hopefully this was helpful.